it was the period where company circle buying was officially printed in newspaper. There was no insider trading concept. Exchange stopping for payment crisis was part and parcel of folklore. Vandho, Patavat, Badlo, Garo, these are official words of lexicon. It was accepted that when you go to sell, you will sell at the lowest price of the day. And when you go to buy, you will buy at the highest price of the day. Even if you make the payment, that doesn't mean that you will get the delivery which will be legal and valid. There could be Vandho. When you do Vyaj Badla, it doesn't mean that your money will be protected. An exchange could be shut for payment crisis. So it was a complete Wild West, might is right kind of thing. And then I came into my corporate job. We had controller of capital issues, which used to determine what premium can be given to the company. And most of the time, IPOs were priced at 70, 80, 90% discount to their fair value. So it was a lottery. Anyone who will get the allotment will quickly make money. In between all these things, the economy was going down. Governments were not stable. Foreign exchange wasn't sufficient. And in that upheaval, we saw the reform process. Rupee was devalued by 30% in 2 tranches. License permit Raj was removed. Import duty was brought down. IMF bailed out India. Gold was pledged to raise foreign exchange loan. Ministry of Commerce and Trade were becoming pro-business. And in this period, we saw CCI getting abolished. I was getting so many mandates from companies to raise money because there was no price limit. You can price it the way you wanted. SEBI was getting created, and they were trying to bring method in the madness of the market. Market was protesting against SEBI. Harshad Mehta took the market on a roller coaster ride. So we saw a lot of churn, but as they say, initially when you churn the ocean, halal wish come out, and then Amrut came out. We saw lots of volatility during that period, but it is on that base that we have seen today's growth coming out. The growth rate moved from 3% pre-liberalization of the 90s to almost 6-7%. That doubling of growth rate is the Amrut, which came because all of us were able to contain the halal of the reform process. Mutual funds in those days were also, in some sense, Wild West, though not like stock market. They were dominated by public sector undertakings. They were giving guaranteed return of 16 and 17%. They used to promise doubling of money, tripling of money, quadrupling of money. There was a rule which says that once you raise money, you need to invest within 90 days. And I was on the sell side trying to sell my IPOs. So I will constantly look at the schemes which are launched. And when that 90-day period is coming to an end, because I knew the fund manager will be desperate to invest and he will not bargain with me for a price. He will be interested in complying with SEBI law. And, there was a gray market in mutual fund. And we had seen a large issue of UTI Master Gain 1992, just around the Harshad Mehta time. And I saw one of the biggest line of investors trying to invest into that IPO or NFO. I myself wanted to invest in those schemes, and I had to stand in a queue for 3-4 hours to put my application. In that time period, we also saw one multinational company, global company, launching their mutual fund. And there was a huge gray market activity. There was a lot of confusion about whether you're going to get shares or the mutual fund units, whether there will be limited amount or whether there will be full subscription. And it opened as a disaster. In the gray market premium, sodas couldn't be completed. People committed suicide. So it was a very, very wild west in stock market as well as mutual fund in the 90s. And the good part was that SEBI was just coming through and it established order in the madness. I remember very fondly SEBI chairman, Mr. G.V. Ramakrishna. He took on the entire broker lobby and entire vested interest and really cleaned up the system. Today you have no payment crisis. Today you have no, market settlement crisis, no Galo, no Patawat, no Vandho, no company circle buying. I mean, a lot of the errors and omissions of those era has been removed thanks to SEBI. "30 years back, I doubt if there were investors. Okay. Most of us were greedy people who just wanted to make money come what may. So we were buying IPOs without realizing what it is. And our mind was conditioned by CCI's time, where any IPO will list at a premium. Post CCI, rules have changed, but it took enormous amount of losses to realize that rules have changed. There was hardly any research. Very few guys were doing fundamental research through whatever means available. And research itself was in a very, very rudimentary form. Insider trading was rampant. Might was right. So there was very, very small community of investors who probably benefited in that period by becoming long-term investors. Today, I see far more maturity among investors. They are well informed. They watch management presentations. They go and attend analyst meet. They read prospectus and balance sheet. And many a times I meet people who are individual investors and whose knowledge about company is far superior to mine.